market sentiment as of right now is in favor of the bulls. Now, does this mean that it's a good time to buy the market? You can decide based off of your criteria. In my opinion, heck no, right? Like looking at the 1 hour time frame for QQQ, again, I'm just pointing out the obvious. Very easy to see overbought and oversold levels. If we look at where we're at right now based off previous highs, it's not that the market can't push up higher. Of course, the markets can always rally higher, but it's okay, well, what's the trade-off? The reward versus the risk. Okay, so from 627, it could possibly go to 630. Cool, $3 per share on QQQ. What's the risk? From 627 back down to 607, $20 loss. So $20 loss for a $2 to $3 potential gain, to me, it's not worth it. But it also doesn't make sense to aggressively short the market because direction is still in favor for the bulls. So two things can be right. Markets are overbought, but markets are so bullish that it really doesn't make sense to short too early because they can sustain themselves at these elevated levels. The thing that I also want to make sure that we highlight is everyone's talking about gold and silver, but one of the best performers in the past week has been natural gas. Natural gas prices have surged over 20% on the day and up 107% in the past 5 trading days. One of the most incredible commodity markets we have ever seen. We have gold rallying. We have silver rallying. We now have natural gas rallying, but also I wanted to point it out. Copper is also picking up as well. Now, my question, and I'm always playing devil's advocate, so please do not get triggered or upset because I present the bear case. My question is, well, how long can markets sustain these irrational and aggressive levels? That's a genuine question, right? We have silver pushing to all-time highs. We have gold pushing to all-time highs. Same thing with copper and same thing with natural gas. Well, not natural gas. Natural gas was incredibly oversold. If you looked at it, it kind of had a different setup. It's been bearish for quite some time, but it was recently that it went from lows to current highs. But again, a very parabolic move. Copper, a little bit of a different story. It's been bullish, but now it's incredibly overbought. The same thing when it comes down to silver and gold. The reason I present this is just so you are aware of, hey, we do have an amazing rally presenting itself, and it makes sense on why you're trading it. Direction is in your favor. Momentum is in your favor. But understand there is a difference between a trade and a good deal investment. Silver and gold and copper are most likely no longer good deals, right? They're overvalued. They're overpriced. But when they're relevant and direction and momentum are in their favor, they can continue to push up for a short period of time. But all it takes is a quick little correction, and then all of them begin to aggressively crash, as we've seen it in the past before. Look at the history of silver. Look at the history of copper. It speaks for itself. On top of that, the thing that I wanted to share is, of course, this week, we have 20% of big tech reporting earnings. We have Microsoft, Meta, and Tesla on Wednesday after the market closes, and we have Apple after the market closes on Thursday. I just want to make you aware because, again, this is a major week for a bunch of news. With the government shutdown vote on Friday, big tech reporting earnings on Wednesday and Thursday, and also for those that did not know, we have the Fed rate decision, which I do plan to live stream for free on my channel. And there's a 98% probability that the Federal Reserve is going to pause interest rates, which is not what Trump wants and which is not what the market wants. So in 2 days, in 2 hours, again, on Wednesday at 2 p.m. Eastern time, Jerome Powell and the FOMC will announce their rate decision, and then 30 minutes after, they will host a press conference. That is what I plan to live stream for free on our channel, and all you literally need to do is drop a thumbs up and subscribe. Again, great volatility is presenting itself right now in the market. This shouldn't scare you. This should just make you aware that we have a lot of opportunity, but it comes most likely at a greater form of risk. So if you're experienced, just make sure you're not leveraged. If you're a beginner, then maybe it's best to stay cash or to be lightly trading?
We're seeing market breadth actually expanding here. A lot of participation in this market, especially when you're looking at the positive flows on the volume front here. Last time that I checked, we only had one sector that was in the red at this point in time. Kind of changing here a tad bit. We are seeing industrials as well as energy kind of turning into the red here, but we did see some positive momentum taking place. And I think from a technical standpoint, we do have to once again kind of close above that 20-day moving average at the end of this week. Hopefully try to break out here. You are seeing some options flows on the SPX that does kind of point to maybe some positive price action for the S&P 500 over the next couple of trading sessions here. So I think that's actually a positive. And you are seeing a little bit of a rotation back into the Mag 7 names. Microsoft performing really well here today, had a really strong day on Friday, and some other companies, NVIDIA, once again catching a little bit of a bid. We'll talk about that story in a second here. So I would not be surprised if we actually see the Mag 7 stocks, communication services and technology actually outperform this week rather than this broadening trade into, let's say, industrials or materials or utilities really outperforming.
Right, so we've got NVIDIA underwater just fractionally here, but, nothing big in the world of NVIDIA. But we've got CoreWeave heading in the other direction in double digits. We've just had both the CEOs obviously talking. Michael Intrater's been here on the floor of the New York Stock Exchange. And in fact, I actually got a chance to speak with him. He's very excited. Obviously, this is all about the infrastructure here. Just talk us through the significance of this story with respect to CoreWeave and NVIDIA this morning and what it could mean for the broader market.
Yeah, I think it keeps the AI story alive, at least for now. Once again, some of this kind of funding rounds, or if you're seeing kind of this integrated funding that's taking place, the market has questioned it in the past. Maybe they're going to do the same here today. Who knows? But NVIDIA is going to invest around $2 billion into CoreWeave at around $87.20 a share. This is also going to result in CoreWeave leveraging some of NVIDIA's CPUs as well as storage platforms just in general, and try to ramp up some of that production and provide additional capacity in the market. So it's an investment for NVIDIA. It's also maybe potentially a revenue generator for NVIDIA over the long term as well. It brings additional capacity to the market. Let's see how we actually respond. I mean, CoreWeave's up about 11%, 12% at this point in time off the highs. NVIDIA was actually green early on. It looks like it did turn a little bit red here. So if we get this concern about this this funding type of mechanism that we are seeing in the AI space coming to fruition again, like we did see when it came to Oracle about a month ago, maybe that does cause a little bit of volatility. I'm not sure if we're there yet, though.
Okay, and as we say, we do have plenty of headlines surrounding NVIDIA as well. Jensen Huang this morning talking from China, where he, of course, is meeting with some of the companies over there with respect to what's going to happen next with the H200 chips remains a big question mark. Obviously, we've got these headlines around Samsung and NVIDIA as well. We're going to be talking about that throughout the rest of the program. But let's switch gears to what else is moving in these markets this morning, and that is rare earths and critical minerals. I'm seeing USAR up in 18% to double digits right now off the back of this US equity stake. Talk us through the significance of this story, because everybody had been wanting to know, KG, which one was going to be next on the US's watch list, I suppose, or equity stake list. And here we are this morning talking about yet another company. So just talk us through what this means.
Yeah, and there's not that many companies that actually do have U.S. mining exposure, especially when it comes to rare earths in the United States. So there's still a couple of companies that have not been targeted as of yet, and we'll see if that actually does take place over the coming weeks, if not months. But the United States is going to be taking a 10% stake in USA Rare Earth. This is going to be around a $1.6 billion deal, a debt and equity package. This is also going to coincide with an additional $1 billion of private investment. It seems like Cantor Fitzgerald is going to be the one that kind of leads that effort, and we'll see if this actually does create a little bit more enthusiasm when it comes to the rare earth space just in general. It seems like it is doing that right now. You'll also notice a lot of these companies are, mid cap or very low float, so it doesn't really take much to move these stocks to the upside. And there has been a lot of positive activity around the options front in this name over the last week and a half. Obviously, we are now seeing a little bit of follow through. So some optimism that domestic production is going to come back in online here in the United States, and not so much mining, it's really processing. And whoever's going to have the processing capabilities are going to be able to push margins in their business.
Yeah, look, it's not going to happen overnight, but it's a start. And this is all, of course, to do with national security, trying to reduce some of that reliance on China and take on some of that hegemony as well. And speaking of, let's switch gears to the commodities patch. Obviously, we've seen gold ripping this morning, punching through 5,000. As I mentioned, we've got silver at 111 right now. Copper is soaring as well. I'm just looking across the oil patch. Nat gas is up over $6, obviously to do with the cold weather. Just talk us through some of the price action, how much of this has got to do with respect to the precious metals and what we're seeing in the moves in the currencies as well.
I think it all is related. Outside of the copper move, for copper, there's a Chilean mine that their workers are going on strike, so that's also going to impact the supply of copper ore here in 2026. So that's really why copper is actually moving higher. In fact, if you look at the fundamentals for copper and the inventory levels, they're starting to ramp up fairly aggressively here in the United States. When you're looking at silver as well as gold, obviously continuing to move to the upside, geopolitical risk. I think there's also this dollar move that, I mean, this is a very aggressive move to the downside when you're looking at the Dixie. It was down about 2.1, 2.2% last week. We're down another, 0.5% this morning here, getting very close to some key areas or some key lows here. If we break through these lows of, let's say, 96, 95 and a half or so, then you start talking about the 90 level. Now, it just depends on the how fast we actually get to that level, if it's really a concern. I know you're going to have a conversation later when it comes to this yen, US dollar kind of pair trade that's also kind of breaking down here. But you can look at this structural breakdown, this flag pattern within the Dixie here, where we kind of broke this key area of support, and now we're going to be testing another one. We'll see if this one's going to be able to hold here, but not a really good look. But this could also be conducive for equity, or not equities, but also commodities as a whole, physical ones moving higher as the dollar moves lower.
Yeah, not good for Japanese exporters, as we witnessed last night on the Nikkei 225, but certainly could be good news, as you say, for some of those commodities moving to the upside this morning.